Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a relatively quiet market for the foreign exchange, but stock markets and oil was a little bit more erratic. Nevertheless, looking over the last 24 hours, we can see that the Australian dollar still remains capped, and that is from around 69.45. Until we get a break there, then the engulfing candle has not been confirmed. It seems that there is a bit of supply and also some hesitation to take on that topside challenge. But if it can take out the topside, then it does put the path on to 71 cents. Technically, we should not abandon this topside level because the indicators are still holding to a positive bias, and therefore we should not rule out at least another attempt at that topside level. Until then, we may see a tight range of 68.60 to 69.25. The euro nudges slightly higher overnight. Since the break of 107.20, little has been seen in terms of momentum. The MACD is still showing a lackluster price action, but the RSI holds to a positive case. On the flip side, the dollar index, which measures the greenback strength against a basket of 6 major currencies, still remains at 102.90. The market seems to be putting aside any new trades at this stage until we get the release of the monthly inflation figures or the consumer price index on Thursday New York time or Friday at 12:30 a.m. This may give us more clues on the rate hike path. Forecasts are expected to show inflation slowed further to 6.5% last month from 7.1% in November. Along with that, traders are betting that the US Federal Reserve will probably hike rates in February by 25 basis points. Looking at the technicals, as I mentioned, we still seem to be edging higher. The dollar, since closing under 103, does put further risk towards 101 to 102 as a wide target. This would see the euro head on towards 108.15 to 108.60. Support at this stage, the topside view holds unless we see a close under 106.45. The dollar yen still coasting sideways since the rejection of that topside level, which is seen around 134.70.90. And from that rejection, the market is still respecting the bottom side level of 130.40.60. Until the market shows a stronger direction in terms of the upside case, which is not apparent due to the weak technicals, then this rejection still holds in place for the downside challenge. We may see a bounce off 130.40.60 and maybe even a correction back to 138. So do be on your guard not to get caught short down at the bottom side of the range. Sterling also a lackluster price action overnight and still remains in a 121.25 to 121.70 range. I feel that the technicals are a little bit weak, so we may see a minor pullback, but overall, if the dollar does slip further from its current place at 102.90, then we may see a little bit more upstep towards 122 with a potential of 124. The market took another challenge at that top side for gold at 1,882 and ended up posting a doji. And from there, it does give a little bit of concern with the bearish divergence and an overheated ADX that the market may actually stage a retreat from here. But I suppose it really depends on what the inflationary numbers out of the US reveal. But I feel that the technicals haven't been able to support any momentum beyond the 82. It would only be a stop loss move, probably up to about 94 if seen, but likely to see a sharp down candle. So I feel that we are getting very close to the top side of the range when it comes to gold. Wrapping up with oil, well, the current pattern that was somewhat negative has been able to break higher, and the market's crushed the level of $76.20.30. It has now revealed the next pathway towards $78.15.20, but I still feel the cap at top side remains at $81. A little bit mixed here. I haven't really decided in terms of how the technicals are placed to support a rally because the MACD is still lackluster and still giving me little to go on to rely on the two indicators to support a bullish move. So it might be just a stop loss move after these two heavy candles. and the market is still waiting whether the dollar can rebound from 102.90 or take another step lower down to 102 to 101. Nevertheless, I feel the market may be a little bit directionless in the next 24 hours, and just see if this current candle can uphold its current move. Well, that's a wrap for the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.